It's almost 11 a.m. here in Manila, 1 p.m. in Sydney. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin.
I'm Stephen Engel in Tokyo, outside the BOJ headquarters. The central bank looking set to raise rates for the first time in 17 years, while also reportedly scrapping the yield curve control.
And I'm Paul Allen in Sydney, where the RBA is widely expected to hold rates at a 12-year high, with the economy showing signs of slowing further, while unemployment trends higher.
Well, a big day for markets, and obviously traders are nervous. Let's get to Avril Hong in Singapore for how markets are doing. Avril, it is about the BOJ, and we are bracing for madness.
We are bracing. We are waiting with bated breath. Those reports about how it could be scrapping yield curve control, along with buying of ETFs, along with that rate hike potentially. So let's take a look at how markets in Japan are faring. We're, of course, in the lunch break. But you get the sense that regardless of this normalization of policy, that markets believe that the Nikkei can still run higher. The fundamentals are intact amid all this corporate governance improvements. And note here, we saw it decline in the morning session, but it did close 2.7% higher just yesterday. And we see in the options market, for example, the April calls, the contracts for the strike price above the 41,000 level, those were actively traded. And regardless of this normalization that we see today, we are still likely to see negative real rates persist. That's going to mean yields are going to take a while to climb in Japan. And between the US and Japan, given that yawning yield gap, that's going to put that pressure on the yen. The yen, of course, has been pretty well behaved. You feel the sense that the Fed's move will matter more for this currency pair. Let's flip the board and take a look at how it has been faring since the past 4 months. Just based on the implied volatility, it's been very tame. You saw this meeting in December and in January where that moved a little bit, but that's been picking up. As I say, we're going to be honing in on the BOJ today.
It is about the BOJ, but it is not the only game in town. It is also about the RBA.
Yeah, how can we forget? The Reserve Bank of Australia, a hold is expected. That is the consensus. But we could also see some pockets of the market believe that it could soften that hawkish bias because of a slightly looser labor market, along with inflation easing. You can see on bonds and in the equity space, we're seeing markets in wait-and-see mode. Regardless, we could see further pressure on the currency, the Aussie. As we see the Chinese economic weakness coming through, it's also been put under pressure given the slump in iron ore prices. So that's what we're seeing cross-asset in Australia. But let's just quickly check in what else we're seeing in the Asia-Pacific if we can, because, of course, we've been watching out for NVIDIA unveiling that AI processor. It more or less underwhelmed or failed to excite markets. So we're seeing the semiconductor stocks in the Asia-Pacific slumping. Chinese developers also on watch. We're getting those news lines from Evergrande accused of inflating its revenue. So this is what we're seeing in the markets for the moment. Has.
Avril Hong, thank you so much for that. Now let's get you to where the action is for the very latest on the BOJ rate decision. Let's get to our Chief North Asia correspondent, Stephen Engel, who's at the Central Bank headquarters in Tokyo. Steve, I mean, we've been waiting for this. It is expected to be the first move since 2007.
Yeah, that's right. We are going to be waiting, and we are waiting on the Bloomberg terminal on our phones, waiting for those headlines to cross, of course, of the policy statement from the Bank of Japan, the headquarters behind me. Sayuri Shirai, who was our last guest in the last hour, told me it might be a little bit later than usual this time because of the widely reported changes to the negative interest rate policy, as well as the reported scrapping of the yield curve control, as well as the scrapping of future purchases of ETFs and J-REITs. So there's a lot to go through. It might take a little bit more time. Still, we're out here waiting to hear that. And again, this is a momentous occasion, if you will, for Japanese monetary policy. As you rightfully said, the first time a hike from the BOJ in 17 years and the end of an era of obviously negative rates. And again, the questions we have going forward is what will be the post-YCC policy on bond purchases, what will happen with the current holdings of ETFs. Lots of questions to be asked still, even though so much of this is already baked in, given the fact that there were those proprietary stories from the Nikkei, not only yesterday, but again early this morning at 2 o'clock this morning. So, lots baked in, but there's still some questions to ask, and we'll hear from Governor Ueda later at 3:30 local time.
How much clarity, Steve, are we expecting today?
Well, that's an interesting question as well, because he still wants to show that has an accommodative stance and that he's not going to tighten too quickly. So we do not expect at all any kind of clarity from the governor on future rate hikes. Is it going to be one or done? We're not sure. The last guest we had on, Shirai-san, essentially said, yes, it should be one and done. But I doubt whether the governor will be basically telegraphing that. But there's also the risk as well of being too dovish, because if he's too dovish, it could potentially undermine the conviction to end negative interest rates. So there's lots and lots of things and a balancing act that Governor Ueda needs to have later today. Let's talk more about this with our guest here. Again, it's Kazuo Momo. You were here with us, in January, when we all thought it was going to be April, right? Was it the wage negotiations that really pushed it over the edge to say it's going to be now, March?
Yes, actually, the wage negotiation number, first round number, came out last Friday. That was 5.3% year-over-year, surprisingly strong. Actually, average forecast by economists was around 4%. Last year, it was 3.6%, much higher than those numbers. So I think that was enough for BOJ to be convinced that this is the time to move.
You were at the BOJ for, 35 years. You were the former assistant governor of the Bank of Japan. How much of a struggle has this been over the last 6 weeks or so between the last meeting and now to make this decision?
Well, I think they were closely watching the wage negotiation numbers and also general atmosphere of society around the monetary policy decision-making potentially taken by the BOJ this time around. So I think this is about how to convince general public, how to persuading for general public and politicians. Now, I think this is the time for the BOJ to have enough information to be convinced that this is the right time to do.
You believe it is and will be one and done? There won't be any more hikes the rest of this year?
It depends on the wage and the price dynamics going forward. But given the currently observed price dynamics, it is hardly believed for me that to have a lot of the subsequent rate hikes this year. Probably at most one hike will be all we get for the rest of this year. Possibly there's no hike at all. It is still a possible scenario.
Kazuo, if it's one and done, if we see an extensive overhaul, what impact might that have on the financial conditions?
Well, actually, financial condition will not change so much because of today's overhaul of the measures existing in the current monetary policy framework. Because the BOJ has been carefully paved the way for today's decision. So even though scrapping YCC, scrapping ETF purchases, everything else, still actually the already existing financial condition will not change so much.
after what we see today, what are the further steps needed for policy normalization? What are we expecting to see from the BOJ?
Well, obviously, monetary policy everywhere in the world is aiming for price stability. In the context of BOJ, 2% inflation is sustainable or not? That would be the first most important question. So far, I have been seeing a little bit short of the 2% sustainability inflation pressure, particularly service front. So I think the BOJ will continue carefully assessing what's going to take place in the service front, particularly wage hikes is already enough. So how the wage hikes will translate in broader service inflation with the key element BOJ is going to look at for the next 3 to 4 months. So I think that would be a key question BOJ has to ask themselves. And probably by the early fall, we will have a relatively more comprehensive picture about inflation and wage pressure dynamics.
Moma-san, how much of a delicate balancing act does Governor Ueda have to have today in the press conference at 3:30? He doesn't want to be too dovish, then it undermines essentially the conviction to exit negative interest rates. But he also doesn't want to be too hawkish because, again, maybe the fundamentals of the economy are not there.
Yeah, exactly. But actually, I think Mr. Ueda has to take into consideration the currently prevailing financial condition. It doesn't make a lot of difference to that, which means that if he is too dovish, that could weaken the yen further. But he is too bullish, that could raise the pressure on long-term interest rates. So I think that he is going to have to satisfy both fronts of the financial condition. Very, very hard task. But I think he will be successfully doing that.
Now, why hasn't the yen appreciated much at all? It hasn't moved at all. It's still staying pretty weak at 149.
Well, when it comes to dollar-yen question, I think you have to look also at the Federal Reserve story. Recently, markets are expecting a few rate cuts this year. I think that would be a really important element. Compared to that situation, the Federal Reserve changing in the Japan front is relatively small.
Moma-san, linked to that, how do you think the BOJ views the weakness in the currency?
Well, actually, for the last 1 or 2 years, weakening of the currency has been unpopular among general public. So BOJ doesn't want yen to depreciate much further. But at the same time, BOJ knows that they cannot control yen in a precise manner. So I think they will try to walk in the tightrope in terms of the impacts on the exchange rate. That's exactly where challenges rise in terms of the communication from Mr. Ueda.
So, Moma-san, if we assume that they're going to be scrapping the yield curve control, what does a post-YCC, balance sheet policy look like?
Well, keyword so far from the BOJ official was the discontinuity of the financial conditions, including long-term interest rate, which means that the BOJ will keep buying JGB regardless of the scrapping of YCC. The level of purchases will be around the same as they have already been doing. So I think my call is that they will keep the level of holdings of JGB at the balance sheet of BOJ will probably, I think, become around the same for the time being, which means that the investment policy is likely result of today's decision.
Kazuo Moma, thanks so much.
Thank you.
Stay here, because we haven't gotten the decision yet, if you can.
Yeah.
We're going to be coming back to Moma-san as soon as we get, hopefully, that decision from the BOJ. We don't know when it's going to happen. It could be a little bit longer than usual, but we're going to be right here waiting.
Well, Steve, we're no stranger to that wait. We've been waiting and waiting. Former Bank of Japan Assistant Governor Kazuo Moma with our Chief North Asia correspondent Stephen Angle. And of course, subscribers can also turn to the terminal for more of our BOJ coverage. Go to TLive Go to get commentary as well as analysis from Bloomberg's expert editors. Well, still ahead this hour, market analysis with Faro Capital. Hear why they think the easy money has already been made in Japanese risk assets. But first, the RBA looks set to extend its rate pause for a third straight meeting later this hour. We'll look at what to watch in policymakers' comments next. And here's one big interview we want to tell you about. I'll be speaking exclusively with President of the Philippines, Ferdinand Marcos Jr., about rising tensions in the South China Sea, as well as the country's delayed sovereign wealth fund. Catch that interview tomorrow here on Bloomberg Television. Keep it here with us. This is Bloomberg. Welcome back to Bloomberg Markets Asia. We're awaiting that BOJ decision. Will it, won't it make that move today? Meantime, NHK reporting that Ueda is proposing to make changes to policy, of course, in the days leading up to today. We've heard from a lot of the media in Japan proposing that the change is coming this particular meeting. Let's get insights. Bring in Bloomberg's Paul Allen and Garfield Reynolds, who leads Markets Live Asia coverage. Gav, let's start with the BOJ again. Yet another report suggesting change is coming.
Yeah, well, change had better be coming if they don't want to set off some very, very strong market reactions. It's been so well flagged. The only question is, will they drop yield curve control today as well as getting rid of negative rates? And then how do they manage that yield curve control? All of that actually becomes more important, you would think, than the negative rates side of things, especially provided they make it clear that, as they have flagged before, one rate hike does not necessarily mean there are more to follow in the near future. So that's the scenario that the markets have been very much expecting, and which has helped to drive up stocks, keep the yen contained, and also Japanese bonds trading without too many ructions. So I'd be very surprised if they don't deliver something along those lines, but surprise and the BOJ have often gone hand in hand.
Garth, as you said, it is so well flagged, yet some people are bracing for some kind of madness. What could go wrong to cause market ruptions?
Well, I mean, we're going to get the statement first. We won't really get, putting Ueda's appearance later on today aside. So in the statement, do they do enough to make it clear what their plans are going forward? Have they provided a straightforward, yes, we're getting rid of negative rates, and maybe they're moving to a 0 to 0.1% band for the short-term rate? And then what are they doing with yield curve control? Again, is it something simple and which outlines, like, yes, we no longer have a yield target of any sort, however, we will continue to buy bonds in the market in order to avoid wild fluctuations, in order to prevent moves getting divorced from reality or something like that. If they simply get rid of negative rates and leave something like yield curve control, getting out of that will be studied or is likely to come in the coming meetings without giving too much in the way of guidance. That's the sort of thing that could set off some very strong moves in the yen initially, because probably if they get their decision out in time, bond futures won't be trading, let alone cash bonds, but we'll see. That is, of course, one of the other difficulties. Because they're taking quite a bit of time with the decision, they could end up coming out after that lunchtime break is finished or close to when it finishes, and that has traditionally helped to add to the disruptions in markets on the day.
And Paul, it is also rate decision day for the RBA. It is expected to stand pat, but it is about the messaging.
Yeah, that's exactly right, Has. We're not expecting a move unlike the Bank of Japan, but what we are expecting to keep an eye on here is the rhetoric, because it was in the minutes of the last meeting that we heard that a rate increase was on the table for the Reserve Bank of Australia, but they didn't end up going down that path. But it did illustrate just what a priority inflation is for the RBA, and that sentiment was reflected in their decision at the last meeting as well, in the statement that inflation is a priority. Right now it's running at 4.1%, but the number that we got in January, the monthly indicator, was 3.4%, so it is at least heading in the right direction, but still well outside the Reserve Bank's target band. Other things we're going to be watching around inflation, I mentioned inflation, unemployment, that also came in a bit hotter than expected in January, and growth's been slowing down as well. So the conversation around the possibility of a technical recession in Australia is a live one. That's going to be something for the RBA to consider going forward as well. But as for the decision itself, no change, 4.35%, but the language going to be all important has.
And it's still quite tricky for the RBA, yeah, Gulf. It is stuck in between the BOJ as well as the Fed.
Sorry, could you repeat the question, Hess?
Yeah, it's pretty tricky for the RBA. It is stuck between the BOJ as well as the Fed.
Yeah, well, the RBA is stuck as well because its economy is actually performing worse than a lot of other economies. So there is that pressure towards, maybe they've done enough on the rate hike front, but then on the other side of things, they don't really dare go down that path until they're clear the Fed is going to go down that path because of the potential impact on the currency. So to some extent, the RBA may actually be happy that the Fed and the BOJ are taking so much of the focus right now. On the other hand, precisely because of that, their hands are kind of tied. They're definitely stuck with a very difficult path if they want to actually shift policy at all. By the same token, being stuck on the policy front means that extra focus on what they say. They could readily say something that is interpreted as signalling they're more dovish than they really intend to be, especially if that's compared with what's going on with the Fed.
Bloomberg's Paul Allen and Garfield Reynolds, who leads our Markets Live coverage in Asia. Thank you so much for your insights. Of course, the RBA set with its decision at the bottom of the hour. The BOJ, meantime, we're still waiting. The yen trading just a tad higher versus the USD. Plenty more ahead. Keep it here with us. This is Bloomberg. It is a big day for markets. We're expecting the BOJ with its decision any time now, and the RBA is set to come up with its decision at the bottom of the hour. Asian equities slipping before those decisions, in particular that of the BOJ, where authorities are likely to bring an end to the world's last negative rates regime. Well, it is trading lower for the Nikkei 225. The yen, though, just a tad higher versus the USD. Meantime, Australian dollar flat at 65.60. Plenty more ahead with the RBA decision just minutes away. Keep it here with us. This is Bloomberg. Welcome back. We're awaiting the RBA rate decision due in just moments. We are expecting the RBA to stand pat for a third meeting. It is expected to keep rates at a 12-year high as Australia's economy is showing some signs of slowing further. Unemployment, by the way, also trending higher. Plus, the property market remains pretty hot, and hence it is expected to come up with a pretty hawkish tone. Some expecting a slight tightening bias. Recent data has been consistent with progress towards the RBA's target. All this against a backdrop of that sticky inflation in the U.S. Of course, we're awaiting that Fed decision on Wednesday. Powell and friends have said they're not in a hurry to cut rates anytime soon. Taking a look where we are in terms of how the ASX 200 index is doing, it's currently up by about 1/10 of 1%. The Aussie dollar at 65.59 versus the USD. Again, we're awaiting that RBA rate decision. Expectations are it will stand pat for a third meeting in a row, and that's on the back of the economy showing some signs of weakness. Also, a hawkish tone is expected from the RBA on the back of that pretty hot property sector. Paul, let's get your take on what's happening and what is expected from the RBA.
No change, and which is no surprise. So the cash rate stays at 4.35% for a third straight meeting, and as you say, that is a 12-year high. Now the tricky part begins, and that's picking through the statement to figure out where we're heading next. And here are some of the highlights from the statement. The board resolute in determination to get CPI back to target. So that's echoing some of the remarks that we saw at the last decision, that inflation remains a priority for the RBA, running at 4.1% at the moment, but that monthly January figure that we got was down to 3.4%, so it is heading in the right direction. The RBA also saying to that point, inflation continues to moderate, but it does remain high. A wage growth level is consistent with the inflation target as well. Services inflation, however, remains elevated, and services inflation is moderating at a more gradual pace. Some words here on household consumption as well, remaining particularly weak, and this was something the RBA expressed concern about at its last meeting also, that there were some uncertainties around household consumption. Take a look at how the market is responding right now. We're seeing modest gains on the ASX. It's been a pretty quiet day there. As for the Aussie dollar, though, we're seeing not a great deal of change, which suggests that this has gone very much along the lines that the market was expecting it to has.
That's right. But what are some of the biggest concerns for the RBA right now, Paul?
Yeah, well, there is the question of where they go next, and it wasn't until we got the minutes that it was revealed that hawkish bias was firmly in place. For now, we just have a reiteration of that language that inflation does remain a priority for the RBA. But there are risks here too. We heard some commentary earlier today that, look, if the RBA was seen to be too dovish, that could be very counterproductive, because we would see speculators return to the markets, assets would get bid up. Of particular concern, you mentioned there was the housing markets here in Australia. Notwithstanding everything else, it's still pretty hot. Australian property is still very expensive, and if there's any hint that interest rates might be coming down, well, that could fuel a stampede back into the property market. We could see rents rising again. That would stoke inflation, and all of this hard work that the RBA had done up until this point, getting inflation under control, could be put at risk. So that might be some of the reasoning that we're seeing here behind this ongoing slightly hawkish rhetoric. As for what's next, we might learn a little bit more in just under an hour's time, because of course the Reserve Bank of Australia holds press conferences now after its decision. So there will be an opportunity to hear from the Governor, Michelle Bullock. There will be an opportunity for the media to give some questions as well. The next rate decision is not going to be until May. We're not going to have anything in April, so May the 7th will be the next time we get something from the Reserve Bank, and a week after that it's the budget, so we might be getting some stimulation from the fiscal side as well. As
lots for markets to mull over. Paul, Alan, thank you so much for that update. Let's do a check-in on how markets are faring with Avril Hong in Singapore. Of course, we take a look at the Aussie, gave up some of those losses, now back to where it started, Avril.
Yeah, we're taking a look at Aussie dollar, but also what we're seeing in stocks and bonds down under, and it looks like a bit of that pickup on the back of that hold from the RBA. Of course, we're still sifting through the statement. Flip the board, we want to take a look at a gauge, in a way, of the risk sentiment, and we're seeing the Aussie versus the yen. That's been climbing today as well, something to keep an eye on as we are keeping the lookout for what we get from the Bank of Japan. Flip the board again, because we have Japanese equities back from the lunch break, and of course that statement, or rather that report from NHK about how Governor Ueda is mulling that tweak in policy. We're seeing the Nikkei still in negative territory. It is that countdown onto what we get from the Japanese central bank, Has.
Avril Hong, thank you for that update. Well, let's get insights, perspectives. Our next guest says the easy money has already been made in Japanese risk assets and forward-looking returns will be more measured now. Let's bring in Hamza Ayub, portfolio manager at Faro Capital. The BOJ now out with its decision. Let's take a look at how the BOJ has... let's get you on the very latest on the BOJ. Just give me a moment while I drag in the headlines on the BOJ. We have the BOJ scrapping yield curve control, is also set policy rate to zero, between 0 and 0.1% range. It is pretty much in line with what markets have been expecting yet again. BOJ scrapping that YCC and its set policy rate in 0 to 0.1 range. It's also set its policy rate in range between 0 to 0.1%, scrapping that YCC, pretty much in line with what was expected by the markets. The yen weakening versus the dollar immediately after that, and the BOJ also says it will keep buying bonds. Okay, just a recap of those headlines again. The BOJ has done exactly what the market expected it to do, getting rid of YCC, also making exit from negative rates. Let's get insights. Hamza Ayub, portfolio manager at Faro Capital, which has over $1 billion in assets under management. Hamza, your thoughts on the move today?
Hi, Haslinda. Right, so I think it's basically, in short, we haven't seen any ninja move from BOJ, if I were to sum it up in one word. It's pretty in line with expectations overall, and we are seeing that in yen at this point in time. Overall, we still have to get into the weeds of the overall notes of BOJ as to what are they going to talk about the forward guidance, whether they are going to change the inflation target, and what kind of communication we get from the BOJ. But at this point in time, it's nothing too drastic overall.
You said the easy money has been made. So how do you continue to make money in Japan? How do you play Japan right now?
So what we are doing is, at this point in time, is that if you look at Japanese equities over the last 1 or 2 years, and we look at this drastic upside in Japanese equities, mostly in yen, in dollar terms, they are probably in line with S&P and the rest of the world. And we feel that from here onwards, given the reset that we have already seen in Japanese valuations, and given we are at a point in time where monetary policy will start to normalize in Japan also, overall, the way to make money in Japan is basically going more bottom up. And what we've been doing is, obviously, there's a long-term thematic in Japan, which is corporate governance reforms. Obviously, we continue to play that, where we feel there'll be going to be capital return to shareholders. They're going to be upside. Second is, we do feel that a subset or a first derivative of those corporate governance reforms will be dividends in Japanese equities, which will increase significantly over the next 1 to 2 years. And probably the dividend future market is underpricing that. So that's another way to play it, play through the dividend futures. So that's some of the ways that we are looking at overall. And like I said, that we have seen year to date more than 18% in Japanese equities. Last 1 year in local currency terms, huge returns. We have come to a point that everybody is now very, very positive in Japan. It becomes a consensus trade. But we feel that now is actually the time to start really taking a step back and looking at the bigger picture and going more bottom up.
Hamza, now that we have seen the move from the BOJ, are you expecting any repatriation, or it's going to be drip, drip?
Look, that is the elephant in the room, right? The Japan carry trade. There's a very interesting research by St. Louis Fed about the overall government balance sheet in Japan and the huge amount of carry trade. In some ways, the gross amount is around 20 trillion. We all know that Japan is a net lender to the rest of the world. And on the asset side of the balance sheet, we have around 50% in foreign securities, and that is about 4 to 5 trillion. Now, it's that, which means that whether this carry trade will get unwound. At this point in time, many people have gotten stopped out on this carry trade because we haven't seen that carry trade getting unwound. And the reason is normalization, gradualism by BOJ. They are in a situation where they can't risk big unwind of this carry trade, and hence we continue to expect that overall carry trade will continue to be in place, and hence there will also be gradualism by the Bank of Japan in terms of monetary policy.
Hamza, hang tight. We just want to get over to our colleague Stephen Chu, the Chief Asia FX and Rate Strategist at Bloomberg Intelligence. Stephen, your thoughts? Take a look at where the yen is right now. Unless my screen is wrong, it is pretty much unchanged from where it was this morning.
Yeah, I think the result is actually quite in line with what the Nikkei story that is broke before decision. So basically, they scrapped the yield curve control for the 10-year JGB yield. They sort of hiked the policy rate to 0 to 0.1%. They scrapped all the ETF purchase. So basically, it's just in line with the story. So I think market is not too satisfied with that. So that's why you see dollar yen not moving. And at the end of the day, dollar yen, it's about US and Japan yield gap. So it's still all about the Fed instead of the BOJ. I mean, like BOJ, so if you look at it, effectively they have hike rates by less than 25 bips or 20 bips from negative 0.1 to 0.1. But for the Fed, I mean, like it's still about when the Fed is going to cut. Because if they cut, it's going to be 25. And that's really more than what the BOJ has hiked. So going forward, cost of carry still matters. So unless the Fed really start cutting rates fast and fiercely, otherwise it will be hard for dollar yen to drop sustainably still.
So if you were to hazard a guess, where will the yen end in 2024?
Now, so our fair value model now is pointing dollar yen at 146, so near 146. So at least it's going to be below that. So assuming the Fed cut rates by 3 times or more than that, then I think it's very likely you're going to end right below 140.
Stephen Chu, Chief Asia FX and Rate Strategist at Bloomberg Intelligence. Thank you for your insights on the yen. Let's get back to our guests at this point in time. Hamza, if you're still with us, you know, the BOJ has said time and time again, it's not going to be consecutive rate hikes. How do you play that? How do you trade that?
Interesting question, right? So at Faro Capital, we basically manage portfolios which are multi-asset, and we have allocation in Japan when it comes to within our multi-asset portfolios. And the way we look at Japan at this point in time is in a global scheme of things. We feel that there are only 3 market movers right now when you look to financial markets globally. One is obviously US, and we can come to that, whether Fed will change or what kind of communication we'll see from Fed. Second is China, where we know things, how they are. There's a lot of concern overall on the growth model. And then third one is Japan. And the reason Japan, because of, again, the huge carry trade. It has a very positive net interest, international investment position. Now, one can make an argument that a lot of this money from this carried trade goes into risk assets of other developed markets, may it be US, may it be Europe, and also some EM FX currencies where there's a huge carry trade going on. And what this could do is, if there is a bit of a risk due to the change in forward-looking monetary policy in Japan, and if this carry trade gets unwound, the kind of bearing it may have on global financial markets, and how do you protect your portfolios in that kind of situation? And that's the key question. Instead of looking at the other side of the equation and the other side of the coin and seeing how we can maybe play yen dollar or try to eke out small gains here and then, I guess the elephant in the room is that how do you protect your portfolios if there's something breaks on the Japanese monetary policy side? I think that's the main thing that we are worried about.
Hamza Ayub, thank you so much for your insights. Yes, the BOJ moved, but no, not all questions have been answered. Thank you so much for that. Let's get back to our Chief North Asia correspondent, Stephen Angle, who's at the Central Bank headquarters in Tokyo. Steve, pretty much what we anticipated, YCC gone, the end of negative rates as well.
Yep. Yeah, that's right. I mean, it's no surprises really here. Hopefully we'll get more clarity, though, obviously at 3:30 when Governor Ueda will address the media and to get a little bit more clarity on the post-YCC, balance sheet policies and the like. But yeah, it's exit from negative interest rates with the exact kind of hike, 10 basis points that we expected. They're scrapping the yield curve control, and they're also going to essentially pare back their purchase of ETFs, and that was all reported before. Also, of course, they stated that they're going to maintain a more accommodative stance on monetary policy. Let's bring back in our guest who's been patiently standing by, former BOJ Assistant Governor Kazuo Moma. So no surprises, right?
No surprises today.
So what do you want to hear then from Governor Ueda?
Well, Obviously, how the BOJ is going to look at the indicators in terms of the sustainability of 2% inflation going forward, and how wage inflation is translating into a broader CPI service inflation, because that will be the key indicator that will shape the monetary policy going forward. And the second thing is that how and when the BOJ is considering reducing its balance sheet, because today's decision indicates that the balance sheet size will roughly remain the same, because they will continue buying JGB at the same amount that they are now doing.
So there's no tightening there?
No tightening there. No QT at all today.
Yeah. So when they put out the statement that says essentially they expect accommodative financial conditions to remain, what is that? How do you read that?
Well, that is, theoretically speaking, very broad concept, because right now interest rate is around 0 and inflation rate is 2%, more than 2%, which means that we are still deep in negative territory in terms of real interest rates. So even though with some of the interest rate hikes, still we could be said accommodative policy. But I think the key, the code from the BOJ, from that kind of expression is that we are not rushing in terms of normalization of monetary policy for the time being.
So you still feel one and done. There's nothing in this statement that indicates that there's going to be further tightening.
Exactly. Statement itself doesn't say anything about the further normalization going forward. I think Mr. Ueda will be probably asked about that today's press conference afternoon, 3:30 in the afternoon, and he will probably retain ambiguity about what they are going to do and when, the time schedule of that. So I think, generally speaking, BOJ is like to address the situation by saying keeping accommodative monetary policy condition, but he doesn't make any clear sense about exactly when and what the interest rate is going to raise.
Is ambiguity what we need right now, or do we want clarity that we are in an interest rate hiking cycle?
I mean, given the situation of the uncertainty about the level of the wage pressure and how it's going to translate into price pressures, I think still ambiguity is something BOJ has to hold.
And inflation, they feel pretty confident that it's going to stay above the 2% target. The statement says year-over-year CPI increase likely to be above 2% through fiscal year 2024.
Yes.
We don't have any more clarity beyond that. The wage increases were a good step forward. But again, there are underlying weaknesses in the economy, is there not? And a lot of that inflation, wasn't it not, as well, kind of from the weak yen, foreigners coming in, and prices. A lot of retailers have pricing power in places where there are a lot of tourists. Is that sustainable?
Well, tourists still account for only 1% of whole GDP, and most of the consumers are still very cautious about spending. As a matter of fact, consumer spending has been in negative territory for the last 3 quarters. So it's really amazingly weak as a matter of fact. So I think the BOJ would like to see how wage inflation this time around will really translate into a strength in consumer spending going forward that will make price pressure more sustainable for 2 to 3 years. So even though BOJ said it's likely to have 2% inflation until 2025, 2026 actually, still I think the BOJ will have more evidence that they are really right about that.
How significant is it that they've come through with what was reported that they will no longer purchase ETFs that's been in place since 2010?
It's been placed since 2010, but at the same time, there was a relatively big overhaul back in 2021. Since then, for the last 3 years, BOJ didn't purchase ETFs so aggressively. As a matter of fact, for REIT is concerned, BOJ didn't buy any REIT at all for entire last year. So I think the transition will be relatively smoothly done.
All right, Momo-san, I think my colleague Haslinda has a question.
Momo-san, I'm just wondering, is there a risk we could see 2% inflation sooner than expected and the BOJ finds itself behind the curve?
Well, I think that is a very good question. As a matter of fact, if the 2% inflation is really sustainable, I think the BOJ will find itself soon behind the curve. But I think the truth is that BOJ are still not sufficiently confident about the sustainability of 2% inflation. They say it is likely, but it's not really definitely so. So BOJ still have to ascertain exactly where 2% inflation becomes sustainable in a more durable sense.
So how might the BOJ move respond if it finds itself in that position?
Excuse me, I couldn't hear you so much.
What should the BOJ do if they find themselves in that position?
Okay. Actually, BOJ is really have to look at the indicators of the economy and prices very carefully. And of course, communication will be very important. I think next several months will be the key for the BOJ in terms of the smooth transition of monetary policy from negative interest rate policy phase to a more normalized monetary policy conditions. Depending on how 2% inflation is really true thing in Japan, BOJ BOJ probably have to start sometime this year, possibly talking to the people that they may raise interest rates a little bit faster than many people are now thinking now.
Momo-san, what conditions are needed to maybe start paring back the amount of purchases of JGBs? They're going to keep it pretty consistent. I did have a guest on earlier today saying there should be tightening there.
Well, actually, there are two arguments. One is whether or not BOJ should tighten much more in terms of the price inflation at 2% level. The other argument is that actually the purchase of JGB right now is really distorting JGB market. So I think that aspect is much more important. As a matter of fact, BOJ is now conducting what is known as the broad perspective review, and they are reviewing the side effects, unintended consequences of JGB purchases on the JGB market. And I think on that front, BOJ will come up to some kind of solution soon. So I think on that ground, BOJ will start reducing balance sheet size through reduced size of the JGB purchases, probably I think by the end of this year.
How significant is this decision in the statement that we've gotten so far right now? It doesn't seem like they're going to be doing any kind of big bazooka. It's not huge tightening. The market has not necessarily, with the yen, has not reacted tremendously. It's going to be the next steps going forward.
Well, I think this is the part of the very long time to transition from the very accommodative monetary policy to a more normalized conventional monetary policy easing. So I think the BOJ is really carefully moving forward step by step. So this is just one small step. This is still the part of the long road BOJ is going to travel going forward. So I think the communication given today is relatively balanced, and how Mr. Ueda's conference today is going to play out is also very important.
So you're there. You have a question for Governor Ueda. What is the one question you ask him?
Well, it's really difficult because Mr. Ueda is really good at answering to any challenging question. So no matter how you ask, I think Ueda-san will come back with the very good balanced answer.
All right. What do you think this decision today reflects the overall health of the Japanese economy right now? Because you basically, through a revision, essentially avoided a technical recession, but still there's underlying weakness there.
Yes, actually, BOJ is pursuing wage price feedback. Well, that is a good thing, but at the same time, real economic growth is another thing. So I think the real economic growth is still anemic, and the productivity growth is the key word for achieving more higher real economic growth. So it's not really BOJ policy, but the more broad economic policy, mainly driven by government, is the key to drive that kind of the momentum for real economic growth going forward. So I think the ball is now in the court of the government, not the BOJ.
A lot of people are looking at the yen. Obviously, we've talked about it, how it stayed fairly stable at about 149. I haven't checked it in the last 10 minutes or so. Maybe Haslinda can bring that up next. But essentially, if the Fed starts signaling that they are about to pivot to easing, how far could the yen potentially, given that we are now exiting negative rates here, how could potentially the yen strengthen? To what levels are we talking about?
Well, still, there are a lot of variables we have to look at. at, and the pace of the rate cut of the Fed, and also how quickly BOJ is going to normalize, and also underlying strength of Japan's economy is also another key. I think it's very difficult to say within the 6 or 12 months or what's going to take place in exchange rate place. But I think in the next 2 to 3 years, I think direction is probably, I think, higher yen, because I believe that the manufacturing base is now being restored in Japan. So eventually, I think people realize that Japan's competitiveness is actually getting stronger than past 10 years. The trade deficit is going to shrink, and maybe we're going to hit again trade surplus place. So I think that kind of the situation in the industry base, combined with more normalized monetary policy, bring us to 130, 120 level within 2 or 3 years.
Okay, 120 to 130 within 2 or 3 years.
Yes.
Haslinda has another question.
Yeah, I just want to follow up on the yen. What would it take for it to go to that 120 level in a shorter period than anticipated?
Well, I think today's decision was already priced in widely, not just foreign exchange market, but also broader financial market. So today's decision doesn't have any reason to clearly move the yen so much. So people are just taking some profit, something like that. So some kind of internal dynamics might be taking place right now. But I don't think there is a clear reason why BOJ's decision today is really impacting foreign exchange market. So if anything, I think any remarks by Mr. Ueda this afternoon may be some interesting element we have to look at.
Moma-san, when do you see 10-year GGBs getting to 2%?
Yes. Excuse me? What does he?
When do you see 10-year
When do you see
JGBs
10-year
getting to
yield
2%?
of the JGBs?
Okay, that is a very... Yes, that's a very interesting question. Actually, it depends on the inflation dynamics going forward. If 2% inflation dynamics are really firmly established in Japan, I think the JGB 10-year bond yield will quickly move up to 2%. But whether inflation is really firm at 2% is a very big question. And the BOJ and other economists as well, including me, have to carefully look at the price inflation, particularly service part of inflation, is playing out for the next 6 months or so. After observation of 5 or 6 months, an average inflation on service price is really established around 2% or more. I think the bond will quickly move up, probably I think the summer or throughout fall this year.
Moma-san, I mentioned about the current rate of the Japanese yen to U.S. dollars. It has actually weakened after this statement at 149.69. Do we get back into the scenario where there could potentially be further weakening past 150, and then you're talking about intervention? What is the danger zone? What is the line of acceptability?
Well, actually, when we are 149.60, 150 is within the reach. So anything could push a yen currency to 150 anytime soon. But at the same time, it doesn't really trigger intervention at this moment, because once only a few weeks ago, we hit already 152. And also to the extent that the yen move is gradually approaching to 150, 151, still government, the BOJ, can be relatively just watching situation, how the situation is going to play out. But if the yen, for example, quickly change to 155 or something like that, it is the time that the government might start considering the intervention in the market.
So it's not a yen story right now. But if it does go in 2 to 3 years, potentially to 120 to 130 range, then it starts weighing on corporate profitability. Does it not?
I mean, probably causality is the reverse. I think the yen could move up to 120 only when corporate could earn a lot of money, even with the level of 120.
All right. Moma-san, thanks so much for
Thank you very much.
extending your time here outside the Bank of Japan headquarters. Obviously, we got that rate decision. They are exiting negative interest rate policy. They are scrapping the yield curve control, among other steps. We'll get more clarity from the governor at 3:30 local time. Haslinda?
A momentous day indeed for the BOJ and for Japan, the last one to exit negative rates. Taking a look where we are in terms of markets as a whole, of course, the focus now turns to the Fed, which makes its decision on Wednesday. It is expected to stand pat, but it is again on the messaging whether or not it is likely to make those cuts, 3 cuts this year, or pare it down to 2. And of course, expectations are that it might just do that. Swaps market pricing a 50% chance of that move in June. That is it from Bloomberg Markets Asia. Lizzie Burden is next with Daybreak Middle East and Africa. And of course, she'll bring you the very latest on Bloomberg television. Again, when it comes to the markets, it is pretty much in trepidation ahead of that Fed decision. We've already had the BOJ, the Fed, in focus right now. Lizzie Burden takes us through the latest on Bloomberg television.